It's a great pattern, but it's not good for new people because you're faced with a decision that you're not supposed to have, which is this a long or short? If you don't know and you have to take a guess, that's not a good pattern for you, right?
Hello, everybody. This is Anthony for Investors Underground. Today, I have the opportunity to speak with an incredible member within the Investors Underground and trading community. He's a trader and investor, mentor and entrepreneur. He's the founder and CEO of Bulls on Wall Street. It's my sincere pleasure to welcome Mr. Kunal Desai. Hello, Kunal. Thank you for being here and taking the time to speak with me today.
Hey, man, I appreciate you having me on, man. I've known Nate now since 2008. It has been an amazing career in trading.
Kunal, for those who might not know everything about you or haven't spent that much time following you, can you maybe give everybody just a background on how you first got interested in the stock market and trading?
So I've been interested in trading literally like my whole adult life, but it started even before that. And my dad was always really into the stock market. You know, my dad moved here in 1980, and familiar immigrant story. Like, he came here with a few bucks, and he worked as an engineer. So we lived in Michigan, where all the auto companies are. And my dad was like, an engineer by trade, but he was always looking for like ways to make money. Like, my dad always had his hands in like all these like random things. Like, if there was a Tupperware party, my dad was doing it. Like, if there was like somebody's talking about stocks, like my dad was super interested in it. So like in high school, I grew up at the right time, at the right place. Like in high school, it was like the dot-com boom. So I graduated high school in 1999. And so all this new stuff is happening. Like, people are like, what's this internet, right? Like, all of a sudden you have computer labs at your school and everybody's talking about the internet. And so like my dad is like, one of the original people, like probably like that original type of customer that E-Trade would have, where he's like, oh my gosh, like I got an internet brokerage account. I'm making trades. And so I was always interested in it because my dad was really interested in it. And my dad would always like give me tips. Like, he'd be like, hey, like take some of your work money and buy, WorldCom or, like some of these companies. Like, and so like I'd be like, all right, cool. I put like $100 here, $100 there. I'm in high school. And then when I got in college, it was all of a sudden like I had all this free time. In high school, like I had pretty strict parents, and I just grew up like in a certain way, and I played sports my whole life. So I was always like basketball practice, Spanish club, chess club. Like, you're doing, my whole day was just so regimented in high school. Then, you have homework and all this kind of things. I got to college and it was like, holy crap, I got all this free time. Like, I don't even have class on Tuesdays. And I had it was like required at Michigan State, you had to bring a laptop. So I had a laptop, and you plug it into the Ethernet, and you're rolling on your Napster all day. And it's like, I started really digging in to just trading. And my first brokerage account in college was called Free Trade. And man, Free Trade was like, you got like an X amount of free trades every month. And so I would sit at the computer lab and like just try to figure out this trading. Now, it was a lot harder back then, and I was unsuccessful at it because, you didn't have these kind of things. You didn't have podcasts, you didn't have YouTube, you didn't even have blogs. Blogs didn't even exist, right? So, I used to be just on like MSN Money, Jim Juback. That was like the big guy on MSN Money. He'd be like, he had like a stock scouter, like a score on different stocks. So I'd always be like looking for stocks that had like a 9 or 10 score that were like under $5, things I could, like afford. And none of them ever panned out. But, that's how I would start doing it. And then I would slowly start to dig in as I started reading and learning more and more and more. And so I was trading throughout college, and my interest just got like more and more. And man, at some point by the end of it, like all my time was going into it. and that's where I really got started. I still was not good enough when I left college to actually do this as a job. So I had to actually get into the working world at some point. When I graduated college in 2005, I'm not a doctor. I was just on the 6-year program. I'm not a doctor, but I was on the 6-year program. And at some point, I had to get out of college and I got a real job. And that's actually what kind of propelled me back into trading. Once I started working, it was like, man, this sucks. This stinks. And then I really started taking this seriously. And then more and more tools started to develop as I got out of college. All of a sudden, like Google Blogspot became a thing. And I ran into Brian Shannon. Brian Shannon had his own blog spot, and he was posting like all these kind of plays. And there was one that he posted an idea on a company called CPST, and I think it was called Capstone Turbine, and it was like $1.50 stock. And Brian Shannon posted this chart. I was like, what is this chart thing? Like, I just been going on MSN Money, like looking at these ideas and people talk about the fundamentals. I'm like, what is this chart thing? And he's like posting in there, like, hey, if it goes over this, there's going to be a short squeeze. And I was like, what is a short squeeze? And so then I started religiously like just reading all his stuff. And he was like one of the first people that ever was really posting this stuff. And then I started digging in, and then all of a sudden more traders were posting on Google Blogspot. And that's where I met my mentor, Paul Singh, who works with me now. And I was like, he started posting stuff that was like more on the swing trading basis. And I'd be just sitting there leaving comments. Like he'd make a post and I'd leave a comment because he was Indian. His name is Paul Singh. So I leave a comment hoping he replied to me because he's Indian. Like, hey, I'm Indian. I'd like leave a comment that I just post in there like, hey, I'm Indian too. And finally, like after months of posting, he like replied back to me my questions. And then once he replied once, I was like, what about this? What about this? What about this? What about this? And then I really started to get much better, and that really changed the game. Like it was really hard, I think, before to learn trading because like you were just reading books. And for those of you guys that like have read a lot of trading books, you could read a gosh darn 500-page trading book and get like, what do you get out of it sometimes? You get really abstract ideas, but you don't really get like a 1, 2, 3, 4 kind of thing. And I thought when this started happening, when people started blogging, like that was the game changer. And that's when I really started to speed up. And then Paul, after months and months of me pestering him with questions, he took me under his wing a little bit and we started talking on AOL Instant Messenger, and he really started rounding out my nasty points of trading. And that's when I started really catching my stride. And it was a handful of questions that he asked me that really let me know, like, I know nothing. When I talked to Paul for the first time, he's like, okay, well, I showed him some of the trades I've been taking. He's like, okay, like, what is your process on these entry points? I'm like, oh, it was going up, so I bought it, right? And he's like, hey, what's your process on how you size these things? What's your process on when you get out? What is your process on, how you pick targets? And I was like, whoa, what is going on here? Like, this nobody has been talking about. And so then he took me under his wing and we started working one-on-one, and those specific things he gave me. He allowed me and showed me a way to structure all this random knowledge I have. Because when you just learn from books, or now you're learning from, say, YouTube, you have tons of knowledge, but it's all in random spots. It's disparate, right? So like, it's like, okay, yeah, I learned a little here, I learned a little here, I learned a little here, so on and so forth. So you get all this knowledge, but it's not coming in like a coherent system of processes and routines. And Paul, when I met him, he was really able to take those things and push them together and ask me the right questions, which was how, why, when do you do these things? and you have to have set rules for that. And that's what I did in half, and that's what he gave me. And that's when I really, that's when I really hit it hard. And then I think it was about 2008, I quit my job and I became a full-time trader after I'd been working with him for probably about a year. But it took me all those years before that, were one good year, one bad year, one good year, one bad year kind of thing. Even worse than that, sometimes like one good month, one bad month, one good one bad month, or one good day, one bad day.
That's incredible. And you were trading at a very interesting moment in time with the dot-com boom and
Yeah.
eventual bust, and then even to 2007 and 2008. So one of the questions that I have for you is, were you constantly having to change up your trading style, and how important was it to have found Paul, your mentor, in being able to help you navigate those changes in the market?
So then, in between 1999 and let's say the end of the telecom bust, which was like 2003, those were like the nasty years. I didn't know enough to change my strategy. I was trying the things that were working in like 1999, 2000. And then in 2001, 2002, everything was so cheap. So I was buying things because they were cheap. But buying things because they're cheap never really works, right? So in the end, I ended up with just like dogs because, I didn't have a specific trading style and I could not nail down what was working because I just didn't have like those systems, those processes in place that allow you to be a trader.
During this time, did you talk to your parents about your aspirations to maybe trade? Because if your parents are anything like a lot of the parents that I know, there might have been expectations for the type of job or career that you go into. And I would assume during that moment in time, trading was relatively unknown still.
It was. I mean, it helped that my dad was into trading, but my dad is also like a terrible trader. So it was not a good idea to even mention it. My dad's dream, and this is like, prevalent in the Indian community. My dad's dream was that I become an engineer. Maybe I will work with him, and make 80, 90 grand, or that was a lot of money back then, and do engineering stuff. But that just never was in the card. So yeah, there was a lot of times like I was always trading, they knew about it. But after college, like when I started working, like they were really like, hey, this is a career, do this, do this, do this. You got to make this money. You got to get married. You got to do this. And that just was not in the cards for me, and I was working as a headhunter and I actually worked myself up. I was the vice president of the company and I was one of the part-time partners there. And I was like 26 years old. So like I was making a lot of damn money especially for my age. But still that trading itch, like that was always there. So that day that I told my parents, like, hey man, I'm thinking about doing this full time, it was like, what? Trading is for your 401ks, right? And that's like the prevalent attitude back then also. Trading for your 401ks. And by the way, your dad, my mom was like, by the way, your dad sucks at this. Like I'm like, Kunal, what are you thinking? What is this? The stock market is a very bad thing. Your dad is not good. You are not going to be good. Nobody is good. She's like, become an engineer, and maybe if you're lucky, you can go to med school, become a doctor.
And has that changed over time now that they've seen that you've had success in trading and beyond?
Yes. So now over time, my parents started having a lot of fun with it. That, I was doing things in my own way. But even like when I started, so in 2008, I started Bulls on Wall Street. And so I've had this company forever. And the year before that, like I was making pretty damn good money trading. And even then, like my mom, like it'd be like Christmas, it was like Christmas during the recession time of 2008, 2009. And my mom would be like, hey, your cousin Ryan, he's getting an MBA in to be MBA. I'm like, well, Mom, he's getting an MBA because he was fired from the bank he was working at. Like, he's not getting an MBA because he's this ambitious guy. He's got nowhere else to go. And I'm like, and I had already made a lot of money trading, and I've already like been building up my business. And so like I had a lot of things going on. And even then my mom was like, hey, your cousin Brian, he's got an MBA. And I'm like, there's like 30, 40 people around. And I'm like, Mom, like, what's going on here?
I definitely wanted to ask some questions about Bulls on Wall Street, and one of the questions is, what inspired you to start Bulls on Wall Street?
Hey, so that was actually just the luck of the draw. So in 2008, Twitter started just becoming prevalent. So I was posting on Twitter. There was a whole host of other guys that are like still like really, really good friends of mine. Nate's one of them, Daniel Mardar. There's like a whole host of us that were around back then, Stephen Place. And so we're posting on Twitter, and then this thing, Stock Twits, came about. And Stock Twits was like this hot thing. And everybody's like, oh, this is going to change the financial game. So I've been posting all my plays on top Stock Twits. And I didn't have, we had no chat rooms and stuff back then. So I'm posting all my plays on Stock Twits. And fucking Howard Lindzon, like one day, like called me up because I built a big following on there. He called me up and he like cussed me out because I've been posting a lot of small cap plays. And then, I'm like in my mid 20s. So like, they're all ripping because everything is ripping in 2009 as the market changed. So I'm like posting, I post a play, and then, like as it started going up, I post in like, boom, with like 50 O's. And then I would do that for like every play. I thought I was a genius because, the market was ripping and everybody was a genius. So he called me up, he cussed me out one day, and he put me on a timeout on Stock Twits. And I was like, F this guy, like, I'll just do this on my own. So I ended up building Bulls on Wall Street with one of my partners, and because he kept banning me and I needed a place to hang out. And lo and behold, it was just the luck of the draw.
That's incredible. From constraints comes innovation.
Yes.
Awesome. And you must have had thousands of students and people, traders that you've mentored. One of my questions is, are there some common characteristics or habits that you've seen students and traders who succeed really have?
So great question, because this is actually tried and true. I've seen this now in the last 15 years. There's a couple things that are super important. It always helps if you're super smart and all this kind of stuff, but that doesn't really matter for trading. What I have noticed is, number one, resilience. All right. You take some hits to the nuts. Okay. Most people, they take a couple of hits that day. What do? Oh man, I had a bad day trading. I'm going to get a pizza and relax. Hey, I had a bad day trading. I'm going to go to the bar and get my mind off things. That was me for many years. Hey, I had a bad day trading. I'm going to do this. Or even right now, I see it like a lot of people, I have a bad day trading, I have a bad week trading. I'm going to not trade tomorrow. Like, I'm going to take a mental health break. I'm going to take because I'm on tilt, I'm going to take the day off. Fine and dandy, all these kind of things. But what I have noticed is that, like, the traders, like when you're taking the hits in the beginning, the person that comes in is like, oh man, I had a bad day trading. And they might go out for a couple hours and do whatever. But then they get back in night and they actually do their trade journal, right? They actually do their scans. Like, they actually do their work. And then the next day they get up and actually trade. Now, you don't have to trade full size or anything like that. You can go 1/10 size, but you don't earn a vacation day from taking hits to the nuts, right? A lot of people, they trade bad. They're like, I'm taking some couple days off, recharge myself. It's like, no, you don't get a vacation because you stink, right? But the resiliency really matters. Will you do the nitty gritty, that boring stuff when you are losing? And it becomes so important because you know what? It is very easy to do your journal when you made a bunch of money because it's just an ode to yourself of how awesome you are. Hey, I made $1,500 today on these two stocks. Oh, I could have done this better. Oh, I could have done this, right? And so it's like just a nice, fluffer for yourself. But when you do that journal, when you make mistake after mistake, some of them you can't even look at a chart and point like why you made these mistakes. Like there's no technical reason, there's no fundamental reason you made these mistakes. It's just you screwed up, right? And you screwed up bad. Can you journal your trade then and pinpoint in why you did these things? Beyond the technical things, like what else was going on? Did I not sleep enough? Was I fighting with my girlfriend? Was I just in a bad mood? Was I feeling myself? Was I getting a little too cocky? Whatever it is. Can you do the boring work when you don't want to? That's resiliency, right? Can you go through and sift through 1,000 darn stocks that night when you don't want to? That's resiliency. And I think that really matters. Beyond that, the second part is, I think, adaptability, flexibility. What we have learned in 2022 and the end of 2021 is that if you are a one-trick pony in the market, you will lose, and you will lose a lot. So the market was easy for long periods of time, from 2009 till basically the end of COVID. The market was easy. There were periods like in 2015 where the market flatlined. It was just led by 3 or 4 stocks that were tough and you were grinding it out. There was a debt ceiling thing in 2011, so on and so forth. There were pockets of, okay, these were trying times. But in the end, the market was just going up the whole time. So you got all these one-trick ponies. And COVID really brought out the one-trick ponies. Hey, I just buy options on this because it's going up, and I just hold it. If it goes down, then I just hold it overnight. It'll gap up the next day, right? Or I trade these small cap breakouts, and I draw a squiggly line, and I buy it because it goes over, and I make money. Well, 2022 taught you something, which was, hey, if you're just a line drawer, you don't know how to trade. And what we saw was a lot of people, I have friends of mine, students of mine too, sadly, that had made millions of dollars trading 2020, 2021, that lost it all. A couple of them were looking for jobs, right? So adaptability is huge. Okay, in beginning 2021, 2020, you could do XYZ patterns. You're buying breakouts, stock caps up, it's got some news out. You don't need to read the news because you're too lazy. And then you draw a line and it goes over and you buy and you make all this fucking money, right? And so these guys are shredding, right? And when the market is supremely hot, sometimes the dumbest people with the highest risk tolerance will make the most money. That's just how it goes. But the markets change. And so 2022 taught us something, which is, hey, every single thing that worked in 2021 and 2020, none of them worked. None of them worked. So then everybody's complaining like it's a tough market. It wasn't. The market in 2022 was fairly linear. You were shorting XYZ type of stocks. There were rollovers in tech stocks like UPST, Affirm, so on and so forth. But the patterns just turned opposite. So like in a bull market, like we do these things, right? Like me and Nate invented some of these things, right? Like you do red to green moves on bullish stocks, right? In a hot market. Well, when the market shifts, the red to green spot is the exact specific spot you short. It's a small adjustment, but you have to know that, right? And so what you have to be is adaptable, because if you're actually watching it and you just see it over, maybe you don't get it right away. But if you're watching it, you're taking notes, you're being adaptable, you're being flexible, and not so stuck on what made you the money, but what worked, then you'll realize that, hey, the thing that I was doing, I just got to do the opposite. But nobody was doing that except people that had the experience of, going through many years of these kind of things. And so you have to be really flexible and adaptable to, hey, I may have 1, 2, 3, 4 setups that work. But what do I do when the market shifts? Will those setups work? They probably won't. Will there be new setups? Do I do the opposite? So on and so forth. And so it's really, really important to be flexible and adaptable, because you may make millions of dollars doing one thing, two things. When the market even has the slightest shift, those things will not work. And you have to recognize those things. And that's what keeps you in the game long term, 5 years, 10 years, 15 years, 20 years, so on and so forth.
Thank you. I think that's an exceptional answer and very helpful for traders listening out there. Resilience, flexibility, and adaptability. One of the other questions I had that's connected to this, Kunal, is whether there are certain type of strategies that you think are best suited for beginning traders.
Sure. So when you are new, the easiest things that I personally think to do is to follow trend following techniques. There's been a big fallacy, I think, of the last 6-7 years, and a lot of it's just the advent of chat rooms and Twitter and stuff like that. Yes, the biggest reward plays and the biggest kind of percentage plays that you're going to find is say you short small caps, for example, right? You short these pump and dump type of names, and you'll do it, and you'll make all this damn money, right? You can grow your smaller account in big chunks, but then it only takes one to ruin yourself, right? So you never really get anywhere. So now that is a great technique if you are good and flexible and know when to use it. But you also have to know when to lay off. For example, Nate is the best at this specific technique. But even he will tell you, as I've known him, 2008, we used to chat on Gmail all the time about these kind of plays. He's made more money going long than he probably ever has short. But what he's known for and what he's actually made the money on, they're probably a little bit different, right? Because he's always had the ability to adapt. Where it's you know what? I'm not shorting these pigs right now because pigs fly, right? I'm longing them. So you may learn one specific pattern and you buy it at this spot. But you have to know when you actually are supposed to buy that and when that's the spot you short it, right? But most people won't know that. That takes a lot of experience and a lot of flexibility. So that's not the best pattern for new people. It's a great pattern, but it's not good for new people because you're faced with a decision that you're not supposed to have, which is this a long or short? If you don't know and you have to take a guess, that's not a good pattern for you, right? So trend following techniques is really a great pattern for new people because it is not, is this a long or short? It is just, hey, I'm following with this trend. So there can only be one way you can get into it. Now, whether you get in too high or too low, that's a whole different suspect of things. But you have to learn these trend following techniques because in the end, the market's either trending up, trending down, or going sideways, right? And so following with the trends is the easiest way because you don't have to overthink this. You don't want to look at a stock and sit there and think, is this a long or a short, right? You want to look at a stock if it's trending and saying, this is a long based on the daily chart, based on the trend, based on the overall market. And now I am going to narrow down and look for an entry point to long this because I'm trading with the trend. And that becomes much easier because if you, for example, a Tesla or Meta or Nvidia this year, right? These are big uptrends. So you have this huge wind at your back. So now it's okay, I've just got to find a way to get into the waves of this, right? I just got to find a way to catch in to the flow of this and trade with the wind at my back. First, if you go the other way and you're looking at this both ways, then, it's like pissing in the wind, right? It's a great idea when you're with your buddies, you have a couple drinks and everybody's like, shh. But sometimes it flies back in your face and that's not cool. You got to always learn to go with the wind. And so I think that trend following techniques, if you're new, is the best way to go because bull market, bear market, whatever, you follow with that trend. Those are easier trades, but they're also the ones that are going to cause you the least amount of mental distress. Counter trend trading can be very profitable. Counter trend trading can be so profitable and it can have so much reward when you're doing these kind of mean reversion to the mean trades, but they are hard to time and there are tons of mental stress on you. When you're trying a reverse and mean trade and you're going against it, it's you're sitting there. It's going to take all your will. It's going to take all your willpower. It's going to make you question the Lord himself sometimes when you're going counter trend. You're shorting it and it keeps going up, or it's going down and you're buying it and it keeps going down. It makes you question everything. And that's a lot harder of a trade. I think that it's the mental capacity of how much a stock is going to move when you go counter trend. It's a really hard trade. I do that kind of trade too. Hey, we all get into it. Like, right, we see something go like this CCL or something's like $10, it goes to $20 in a few days. And you're like, this thing's a pig, right? Like, I got to short it. Yes, there's a time and place for it. But man, it's a lot of stress. Man, I was staring at this thing for the last few days. Like, I got to short this thing and take it off the list, right? Because it's going to take so many shots. It takes so much discipline that you have to be a really good trader to do it.
Those are excellent considerations for newer traders. Is it fair to say something like a mean reversion type trade is something best suited at a certain time and place and maybe a little bit more of a advanced type of strategy?
Sure. So it depends on market cycles. So there's 4 stages of the market, right? So you have accumulation phase, distribution phase, you have run-up phase and run-down phase. So run-up phase, run-down phase, this is your bull market, bear market. Distribution phase is like a topping out cycle when the market's at highs. And accumulation phase is that sideways basing when the market's near lows, where everything is negative, the news is negative, the world hates the market, but the market refuses to go down, right? So we were in accumulation phase, for example, tech stocks from the summer of last year up until right at the beginning of this year. News is terrible. Market looks terrible. Economy looks terrible, right? But the market just flatlined for a long period of time. And so did all the stocks because they were down 80, 90%. So when you have that specific cycle, okay, all the stocks are going to start to rip even because the news is bad. Even when earnings are terrible, even when CPI, these things all come out, but like the market's not moving. It's near lows. It's not going up, but it's shrugging everything up. So during those phases of the market, it's telling you like, hey, a bullish cycle is coming. So now like you can do certain strategies, for example, like trading breakouts, right? Chasing stocks, right? You can chase if the market is hot. But if you do that when the market is in a distribution cycle where it's topping out, well, in a distribution cycle, guess what? If you chase breakouts, even if you buy it at the picture perfect spot, they're like not going to work. So like if you were looking at say if you looked at the NASDAQ, right, in end of 2021, the NASDAQ was topping out end of 2021 for the last few months. But every individual stock had already started to roll over. UPSD, Affirm, PayPal, Square, every single stock except Tesla, Apple, right? So the market was holding up, but every stock was drifting lower. So you were in a cycle of distribution. Big money was selling. So at that point, if you're, say, doing a breakout trade, guess what's going to happen? It's not going to work. But vice versa, say in the last few months, before in January, December, February of this year, when the market was still near lows, but start to inch higher because you're near lows after the market's retraced 30, 40%, all of a sudden the breakouts start to work because you're in a different cycle of the market where, hey, bad news is good news. But when the market's near top in those topping phases, good news is bad news. Things change. So you always have to be aware of these things. And that's what happens with the flexibility and adaptability to the markets. Most people, what's happened because of COVID is they have become so focused on individual stock setups. Hey, these are the things that are working. These are things that are exploding. And so what's happened is there's been a lack of education in market structure. What are the general indices doing? What are market breadth characteristics, right? Number of stocks going up versus down. Number of stocks breaking out versus breaking down. What are the indexes doing? There's all these nitty gritty things that are happening inside the market that you have to be aware of. But when the market is raging, like in COVID times, those things are thrown out the window. And so you don't have to look at the market. Whether during COVID times, myself included. Hey, market gaps up, down, market's red, green, QQQ is doing this, that. Doesn't matter. Like everything is ripping, right? And so you're just looking at individual stocks and trading these things, and you almost forget that it's a rising tide that lifts all boats. When the market structure changes, all of a sudden your strategies have to change. But we got so used to being easy that we forgot that, guess what? Easy is not always the case.
Thank you. I think that's incredibly important to understand. What are you seeing in terms of success and types of patterns and setups that are working in 2023?
So 2023, this is your good old-fashioned bull market, all right? So you are doing essentially the patterns that you do essentially in COVID times. Maybe not necessarily on small caps, but you're doing them on a different type of stock, those same strategies. What I mean by you're not doing them on small caps like in 2020, 2021 is, during COVID times, those were the things that were running. In this particular 2023, what we've seen is that the IWM, which is, your representative small cap market, it's been flatlined for the whole year. What's been leading the way is tech, right? So it's been big tech for the most part. So you're looking at the QQQs. So it's been mid caps, large cap tech stocks. They've been working. And they've been working and moving around like small caps anyway, so it doesn't necessarily matter. So you can go back to those strategies, which are just pure momentum strategies. For example, like red to greens did not work in 2022. They work now, right? If you're talking about like intraday breakouts, they didn't work in 2022. They work now. If you were talking about VWAP bounces, for example, right? In 2022, the stock was trending up and then it tapped into the VWAP, most likely it was just going to break under and fizzle out. And that was actually the short spot in many ways. Now those areas actually hold, right? And so you're shifting your strategies into more momentum related things that are going to be happy. So these strategies are going to work. For example, opening range breakout. So like what opening range breakout is just a very, very simple 3-candle technique, right? So you have a hot daily chart. Something that's trending or about to break out. And then on an intraday basis, you have a stock that spikes up a little bit, and then it goes sideways and builds out an opening range, right? So 1 candle, 2 candle, 3 candle, minimum sideways. And when it takes out that range, all of a sudden you've got yourself all sorts of goodie. So like, for example, I took a trade on Meta today, right? So Meta had a big breakout at the 289, 290 level on the daily chart. So the stock had been trending up and then been consolidating for about 5 days, right? So Meta had just a small spike up at the open. It gets to maybe like 289. And then the next candle, it's sitting there right at 289. And then the third candle, it breaks that range at 289. And so it coincides with the daily chart breakout, and then you have this intraday breakout. So this is an opening range breakout, which is minimum 3 candles. So when it breaks this, like I'm buying 289 and some change, and I use the options on it. And now you have like this picture perfect, big, what we call MPC, mega penis candle to the upside, right? And so now the stock runs from 289 to 297 and some change, like in a really hot second, right? So it only took, let's see here, by 10:50, right? So 1 hour and 20 minutes, you got to almost 299, 298 and 50 cents, right? So you got 10 points on the thing. That type of setup is working a lot. Opening range breakout never worked in 2022. It very rarely even worked in 2021. But because the market has shifted, it's a chaser's market. We call this a line drawer's market. When the market gets hot, you can just draw your squiggly lines and you make money, right? When the market shifts, like that's not really the case. You have to have a lot more strategies and disciplines and processes in place. The opening range breakout, like that has been working like a charm. And what I'll do is, like, if it's something like a Meta where I have like a big daily level and then I have that intraday ORB, I'll buy the calls on it with the near strike price that expire that week on Friday. You know, you don't need to mess with the deltas, gammas, and all this kind of stuff if you're just day trading these things. And you start to catch like a huge little rippers on these things. And then you get the same results as you would if you were trading small caps anyways. I believe, like, and the Meta calls, like these bad boys. I got the 290 calls. Yeah, I mean, the ORB is at 2. They ran to almost $8. Now, I didn't hold it that whole way because I'm a piker, but you get the same kind of juice, and you don't necessarily even have to trade small cap stocks.
Thank you. That's very helpful. And that sort of gets me to my next topic that I wanted to discuss a little bit, which is about your trading style, Kunal. Do you tend to trade mostly options? Do you also trade equities, cryptocurrencies, or anything else?
So I am a momentum trader. I trade trends. I love high beta names, the stocks that have big liquidity and big ATRs. ATR means average true range. So your charting platform, if you're using TC1000, TrendSpider, whatever it might be, I'll keep on each one of my charts an ATR number. So that's how much a stock moves around that day. So I want to trade stocks that have a big ATR and that are liquid. The reason I have to personally do that is for liquidity reasons. Like, for me, it doesn't move the needle if I buy like 5,000 shares of a $3 stock, for example. Like, I can't get the size I want in a lot of those things, so it just doesn't make any sense for me. So I tend to trade things that are doing 10, 20, 30 million shares a day in volume and that have a big ATR. So I love high beta names. I love trending. And then big part of my strategy is trading PR or earnings breakouts. What I mean by that is, like, a big portion of what makes stocks cook, especially in bull markets, is earnings. So on a short-term basis, stocks move on technicals, sentiment, news, for example. But on a long-term basis, if you're looking like 1 month out, stocks move on one primary driver, which is earnings. So when you have a new or fresh bull market, earnings is going to be the main driver. So stocks that surprise on their earnings, right? The earnings are going to all be shit anyways. But any stock that surprises on their earnings will usually have a gap up on their earnings day, and then they have follow through on it. So you want to be doing intraday setups on it. Why I like that particular type of setup is that you are marrying a fundamental catalyst with what you know about technicals. So, for example, like if you look at the big movers of stocks in, say, the last 60 days, all right, I'm just going off, the top of my head. UPST. So UPST is sitting around at like the $13, $14, $15 range. It gaps up on earnings. There's an earnings surprise. It hits $19 that day. It pulls back for a couple days. Next thing you know, it's rising up into the 40 spot. What that's called is PEAS. It's post-earnings announcement drift syndrome. So what that's essentially saying is that when a company surprises on the earnings, traders, investors, they have to reevaluate what this stock's worth is. And what ends up often happening is momentum just takes over, and momentum begets more momentum in this specific phase of the market. Palantir is like a similar name, right? So Palantir is sitting around like 15, 16 bucks, right? Palantir has been left for dead. So Palantir is sitting at $6, $7. It has a gap up on earnings. It was a little bit of a surprise. The earnings sucked, but it doesn't really matter. It's a little bit of surprise. Everybody already knows that it's going to be junk anyways. That's why $6 instead of 40. All of a sudden, it goes to 7. It chills out for a couple of days, flags out. Next thing you know, right, it starts trending up into the 15 spot. That is the most powerful setup in the market. On a long-term basis, earnings surprises is what moves stocks. When you see stocks go and make 200, 300% moves that can stick. I'm not talking about your pump and dump stocks. I'm talking about like real companies. When they make 200, 300, 400% moves, it's because of themes, it's because of earnings, and it's because of PRs. And so if you look at like say IONQ, right? Like that's a quantum computing company, supposedly, right? Their move, it had earnings out, is sitting around $5-6. Next thing you know, it gets bought up, and now right, you're at $14. It's been trending ever since. But the catalyst on that was earnings. PLTR. The catalyst on that was earnings. That's the way you really want to go. And so if you're a new trader sitting there, we're about to start earnings season right now. So if you look, the earnings season usually starts with Alcoa. Alcoa earnings is 7/19, so a couple weeks, right? And there'll be earnings starting to get before that. So this is the time to really focus up, because there are going to be, now that the market's hot, there's going to be stocks that have earnings every single day, stocks that are gapping up or gapping down because of good or bad earnings, that are going to have this earnings announcement drift syndrome, where they pop up and they're going to be in play for months or even potentially longer. And that's where we really want to go with it. So I love trading high beta names, like Tesla, NVIDIA, Metas. These kind of names are like daily traders. These are like kind of cash flow. These are like cash flow trades. But the big bread and butter is stocks that have news out. Can I apply technicals to the fundamentals? It'd be like if Donald Trump and Celine Dion had a baby, like you'd have this like perfect storm of awesomeness.
Thank you. And how are you finding these stocks? What is your after hours routine look like, or your morning watch list look like? Could you maybe talk about the importance of having a process and a system to find stocks and to get ready to trade them?
First of all, great question and very important. So one of the things that happened when the market just got easy and everything's kind of following through, people just assume that you could have like a trade ideas gap scanner and you run it, and then all of a sudden you go out and make money, right? No joke. Like I won't name any names, but like I did a conference in San Diego once a couple of years ago, 2019, 2020, whatever it was. Kid comes in, he's got a story. I turned $500 into 10 million, 13 million, 15 million. He comes in. I tell the people that are running conference, I'm like, hey, make sure I go after this kid because, he's a kid, right? And I'm like, make sure I go after this kid because he's not going to want to come after me. I'm going to bring down this house. And they're like, no, he's the ringleader, whatever. I'm like, all right. So I'm watching this kid's thing, right? They're like, hey, how'd you make all this money? Well, I turn on my scanner. I look for the top gainers in the mornings. And then, when they break the pre-market high, I buy it. That sure is one piece of maybe one setup, but that's not really a strategy that you can use like long-term. That is a specific thing you could do for periods of time. And it's one small piece of the puzzle. So a whole subset of traders have just grown up thinking like, hey, I can buy a scanner, and therefore when a stock takes out its opening range or breaks its pre-market high, that's trading. That's not trading. Like that is maybe 1 millimeter of trading, and it works for maybe 1 or 2 months out of the year. But you don't make millions of dollars that way. To actually be a trader, you do need systems and processes for everything. So how I always look at things is like this. You have different setups, right? So say you have 5 or 6 setups in a bull market, 5 or 6 different setups in a bear market, and then you have accumulation phase, distribution phase when the market's consolidating. Each specific setup has to have its own processes and routines. So how you want to look at it is like, say, for example, you are baking a cake, right? You've never baked a cake in your life. So you want to bake this cake. It's the first time you're building cake. So when you are doing that, what do? You get a recipe from somebody or a book, right? And you follow it down to the T. It's like 2 pinches of this, 2 pinches of that, 400 degrees this, 350 degrees cooling, 15 minutes in the fridge, so on and so forth. And if you don't follow that specific setup, that specific way, what happens? Your cake tastes like crap. Your cake, it's no good. And trading is the same way. For every specific setup you have to have a recipe. You've got to have a recipe for it. And it's got to be 1, 2, 3, 4. And what happens is when you're new, if you're missing 2 pieces of that recipe, your trade goes to crap. And that's the difference between winning and losing. But what happens, and the beauty of trading is this: at some point, you're baking this cake. Say you bake that cake 100 times, 200 times. You don't need the recipe anymore, right? You're not sitting there with it in front of your face, like 2 pinches, 3 pinches, 400 here. No, you are the master of this cake. People come to your house to taste your cake. You made it hundreds of times. Everybody in the neighborhood knows you're the cake master, right? And you're not looking at a recipe anymore because you've had the repetitions to do this. And so now you know, like you're doing it intuitively. And trading is the same way. You've got to make every trade intuitively. So in the beginning, you have to have a recipe for every single thing. And then after you do it hundreds of times, you don't need the recipe and the checklist in front of you, right? You know how to take the trade. You're taking it all in at once intuitively. And then when you reach a true mastery level, all of a sudden, you can take pieces of your recipe out and switch them and add your own spin on things. Like, I'm not going to use sugar. I'm going to use cinnamon. I don't like things so well done. I'm going to lay off a little bit. And all of a sudden, you're putting your own spin on things and you're calling these audibles. And that's what happens in trading. When you have enough experience and you've originally have the checklist, and you got to follow that checklist because you're not going to make any money until you do. But then once you get mastery, you can start to ad lib a little bit. You can call an audible. And that's when you become a true master chef, right? And that's how it is with trading. When I make a trade, or if Nate makes a trade, or Phil Godeker makes a trade, we're not working off a checklist anymore. We know when to call the audible. We know when to change it. But the only way you can get through that is by having that checklist and doing it over and over. So the way that you have to do that in terms of your processes of, say, scanning and getting ready, you have to have something more than I just look for gappers. You've got to have a top-down approach. So what I mean by top-down approach is, like, for example, when I scan, I use TC2000. You could use any trading view, any platform you want. I use a top-down approach. I first look at all the different market indexes. I got 30 indexes that I watch. It can be from gold, silver, small caps, mid caps, tech stocks, SPY, Europe, so on and so forth. So I look through that. I get an idea of what's happening in the general market in terms of all the different angles. All right, cool. Now, after that, then I run some scans, right? So, you run some momentum scans both up and down. So like I'm looking for, say, for day trading purposes, you're looking for top gainers with expanding volume that are hitting certain resistance levels or pulling back to some supports and bouncing off that, simple things, right? So I start going through all of those things. I'm flagging anything that might look interesting. Then beyond that, right, I'm starting to go through and say, okay, what are stocks that are trending up for most of the last 5 days, the last 30 days, the last 90 days, right? So I'm aware of like the big trenders. So I'm going through a huge process here, and it doesn't take long. But what's happening is this process gives me a pulse of the market. See, when you go through, say you go through 1,000 damn stocks every day, you're learning things beyond just what you're going to trade the next day. I'm not going through these scans to find out what I'm going to trade the next day. I mean, I can just call Nate. I can call Dan Mardo. I can call a couple of my friends. I can go in my chat room and find 5 ideas. That's besides the point. I'm looking for ideas that nobody's thinking about. But beyond that, when I'm doing these scans and things are showing up on the scans, I'm also looking and saying like, how is this playing out intraday? Hypothetically, where could I have bought this? Hypothetically, if it's trending, like, could I have done this? Could I have done that? So now you're marrying your eyes to what's actually working in the market. Hey, these type of stocks, this type of price point, this type of sector is working right now. And these are the intraday patterns that work. So say you just went through, like, say, the top 100 top gainers of the day. It might not give you any ideas, but what it may do is say, whoa, these are the patterns they're coming out of. This is how they're moving intraday. And then this is how I could have played them, right? And so now you're putting it into your head. And now you're marrying yourself to these patterns that are working in this general market. And that's the big portion of scanning. That's why you want to scan. It's not to just get the next 5 plays. You can do that. You can just buy a subscription to somebody's chat room and get 5 plays. That's beyond the point. You want to have a pulse of the market. What's working, why it's working, when it's working, how it's working, what sectors it's working. Man, and it's crazy. The market itself, you will see some markets where like only stocks over $100 are moving. It's not even a sector or company thing. You just see that's what happened. There's some markets where like, man, like $20 to $50 stocks are going. Some markets only tech stocks are going. Some markets only this is going. And so when you go through the scans, now you're getting repetitions. You're training your eyes in patterns that are working, and you're reverse engineering what's working so you know what to look for. And then you build out your list. Well, now you've just already snapshotted in your brain all these patterns that are working. You know what to do. Hey, this company doesn't work off this pattern. It only works like this. And that's the beauty of having an awesome process. You get your watch list, but now you got the pulse on the market. And you can't beat that. When you have an intuitive pulse on the market and you're flowing with it, I mean, you're not even thinking about trading, man. You're just doing.
Thank you. That's a phenomenal answer. And I think that'll be really helpful for traders to think about, because it does have a holistic sort of funnel top-down type approach like you're describing. One of the questions that I had related to this is, after you've done all of your context gathering, your intel, and getting a watch list, getting a pulse for the markets, are there certain times of the day that you find yourself more active, whether that's the morning or the end of the trading day?
Great question. First of all, multi parts of this. So there are 3 stages to the trading day, right? You have your open, you have your middle, and your close. Each stage of the trading day requires different patterns because it's a different time of the market. For example, the open, you don't have that many candles or anything to base your trades off, right? So the open is about price volatility and price discovery. Stocks are going to digest the news. Stocks are going to digest what's ranged. You get the big spikes up and down. That's why you can have really, really short patterns and have like really explosive moves. That specific thing, if you did that pattern midday, it would not work. So for example, if you did a 3 candle opening range breakout pattern midday, and done this a million times in my life, it would not work because midday stocks retrace. And so the type of patterns and the strategies that you use are more dependent on retracement. They're dependent on consolidation, where the open is about all that heat. And so you're going to use totally different patterns. So when you're basing your trading day, you have to figure out, number one, what type of trader you are. Can you handle the heat of the open? I've got a lot of students, I've met a lot of traders. It's too much for them, right? And when the market slows down and it retraces and consolidates, it allows them to see levels, which is important, right? It allows them to see levels. You have specific ranges, right? Hey, this is the high, this is the low, this is the VWAP. You have these things that build out in the middle of the day that you don't have at the open. Now, for me personally, I love the heat because I'm trading with intuition now. I have hundreds of thousands of repetitions under the belt, right? So I can make these kind of moves at the open based on price discovery and volatility and capture that because I have specific setups and sequences and things I look for and then experience and move fast. Where a lot of times, like in the midday, none of those things work. I don't trade well midday because seeing those ranges, seeing the sideways, even though I know there's going to be a trade later, I just don't have the gumption to sit there and watch it, something grind. Like, that's not my style of trading, right? But a lot of people I've met, like, that's where they excel. The open is too fast. And when they have ranges, they know how to manage their risk. They know how to manage their processes just a lot better because you can actually think about what you're trading. So you have to understand what type of trader you are what type of capacity you have, and then focus on those periods. In terms of the close, unless the market is super hot, I'm very rarely at the market during the close. If the market is like COVID times where things are moving after hours and stuff like that, sure, I'll put in my full day and do the Lord's work in the devil's playground for that period of time. But otherwise, like, that's not my thing. Like, if I can get my work done early, I'm getting it done early, because I tend to make more mistakes when the market slows down, because I have this go, go, go personality and I want big ranges. And like, I just don't do good scalping out for 30 cents, 50 cents while the market is slow.
Okay, thank you. I think that's really helpful because you noted that when you do best trading and when to not trade, which I think is incredibly helpful for traders to think about.
That's just basic data too, right? Like, you got to be tracking these things. Like, you don't have to sit there with your Excel sheet and sit there I know a lot of people are so big on data and stuff, and I get it. But a lot of it is like, if you're discretionary trading, it's like, I'm a discretionary trader, Nate's a discretionary trader, right? We're all discretionary traders. So we're scaling in and out of things and doing these things. So the data is not as helpful for us, because when we lose, it's not usually because we got a setup wrong. It's because we made a mental error. Like, for example, like, sometimes I'll be chatting with Nate or something, right? We'll be so convinced that something's a short because it's just gone up so much, right? And then, we might have profits on something and then it just reverses and rips because, we're biased that we thought it was a short, right? And maybe we held on too long, we'd be a little bit greedy or so on and so forth. So these are like psychological errors or discipline errors, so the data is like, counting all your data into such a nitty gritty thing doesn't necessarily work for us, because we're not sitting there in a systematic process where like every single piece of data matters. Like, if I lose during the day, it's because I oversized, I held too long, so on and so forth. So that's not a set up strategic data point. It's a, hey, I was feeling myself today and went for the home run when I shouldn't have. So you got to always be a little bit mindful, of these things in terms of the data points.
What's your perspective and your approach to scaling in and scaling out of trades?
Hey, that's a fantastic question. And so there's two aspects of this that I think are important. So when you're scaling in, and I believe if you are at a certain level, right, if you have millions of dollars to deploy, then scaling in becomes really, really important, because you need liquidity and, so on and so forth. There's a lot of things that are going into it. But if I'm brand new, I'm not scaling into trades. And I know right now people love scaling into trades and they post their execution charts with their damn arrows and right. And for all we know, they're just doing one share, right? Scaling in, if you're new, to me, I tell my students this: wait for the picture perfect setup. If you're trading $5,000, $10,000, $20,000, $30,000, for example, don't give yourself a rationalization to having a bad entry. Meaning, like, say you were shorting something, it starts to pop up and you just blindly short, right? And then you're just saying, hey, I'm gonna scale in. It creates some bad habits, because now you've just taken this shitty first entry, but you have an excuse for it. So then it keeps popping up and you are shorting it. But you have no trade set up there, right? You don't have a specific sequence of things you need to see to get an entry. So if I'm new, I'm waiting for my perfect shot. A one shot, one kill. Because first of all, you don't have the capital to sit there and hold through. You get smoked out real fast, right? And same thing if you're buying dips, if you're trading large caps, small caps, it doesn't matter. But like, if you're scaling in like that, then you're not so focused on getting that damn right entry. And there are so many setups where it's just one entry is the perfect spot. So like, for example, I was telling you about that meta trade. There was only one entry the whole day on it. There was no purpose of scaling in. There was one entry and then there was nothing else that could have been done. And so like, you don't have to do that. Now for counter trend trading, it's a little bit different because something's going, you're countering it. So you may have to scale in and scale in. But even then, man, I'm waiting for the picture perfect setup, a lower high or something along that end, because it just teaches you bad habits. Now, once again, if you got millions of dollars, you're Eric Wood, you're sitting on the golf course smoking ciggies, drinking some beers. Yeah, you got to scale in. Man, you got $50 million rolling around. You got a couple packs of Marlboro Reds. Hey, you scale in because he's got the size. It doesn't matter about the perfect entry. You got to have liquidity. You can't short it all at once anyways. But for the most part, if you're putting 30 grand in stock, 50 grand, 100 grand, no, you don't need to scale in. It teaches you way bad habits.
Can you discuss your free trade approach to maintaining profits that you might have booked during the opening part of the morning?
Sure. So for me personally, I will keep basic rules on all sorts of things. So when I'm in any trade, I don't scale in normally if it's a trend trade. So if I'm trading with the trend, there's no scaling because trading with the trend is a one shot, one kill kind of thing. But I will scale out because you're in a trend, right? So I may enter something at, $100 on a specific pattern, and I know a stock's ATR, right? So you should always know a stock's ATR. So for example, you enter something at the open, for example, and say a stock's got a $10 ATR, it's $100 you enter it at the open on an opening pattern. Well, it's got $10 ATR. So you know where it can go. Now, was it going to get all there in one thrust or not? You don't necessarily know, but you have an idea of its range. So I'm going to scale out of something like that because I entered it pretty much the bottom of the range. And I know it's got a $10 ATR, so I got a piece out of that thing. So then you have a specific thing. But say I was entering something and it was like a flag pattern, for example, right? And that stock is open at 100 and it's got a $10 ATR, and I enter a flag pattern, or what a lot of you guys would call ABCD pattern or something, right? So say that's at 108. Well, the ATR is just $10. So in that particular case, like I'm probably selling out most of it near that 110 because its stock has reached its ATR, and I'll keep some lottos. You always want to keep some lottos in case it does something. But if I was entering at, say, 100, I would be in much bigger size, and I would be piecing out much more aggressively every couple dollars, and I might have 5 or 6 scale outs because I know I have $10 worth of room. But if you enter at 108 and you only got $2 worth of room potentially, now I'm scaling out much more aggressively up into that 110, and I might keep like 1/4 or 1/5 as a lotto. And even then, I'm very wary. In absence of news, stocks very rarely break their ATRs. So if that stock has no news out that particular day, I'm selling out most of it at 110 and keeping some lottos, but I'm trailing that stock up the 9 EMA. I use a 9 EMA to measure the short-term trend. I'm trailing that stock up the 9 EMA because I know the ATR is used up. Like I'm not getting big city dreams, that this is going to go to 150 or 160 or even 120 because the stock's ATR is its ATR in absence of news. Now in news situations, of course, everything expands and then you have to look at it, and that's a whole different subset of strategies.
Thank you so much, Kunal. Another question that I had was about the importance and some of the experience of potentially joining a trading community, whether that's a chat room or building a pod of like-minded traders. One of the questions I had was, what would your response be to those who are looking to join a community with the plan of just copying the trades of one of the more successful traders, or someone who might join your community with the hopes of copying your trades? What's your response to them if they're looking for success that way?
I mean, you can't copy anybody's trades, right? I mean, in the end, I don't personally believe so. I've tried doing it even myself. I have friends that are big 8-figure traders that I chat with on G Chat, and we share ideas. And even then, I can't copy their trades. Like it never works because the thing is, your entry, when you copy somebody's trades, your entry is always going to be a little bit after theirs, and then your sales are always going to be a little bit before theirs because it's not your trade, right? So you get a little bit of a profit and you're like, I got some money, paid for my subscription, I take the trade. But then the main trader holds it for the whole day. It ends up being like a huge, huge move, and you got like 2% out of it. And you're like, whoa. But then what happens is when the trader takes a loss, you're copying their trade, you take the whole loss, right? And you may even get in after them and then sell a little bit after them. So your loss is going to be bigger than theirs. And so now you get the big loss. And then when they get the win, you never get that whole win because, I mean, you're following them, but your emotions, when it's your money and you get some green, you're going to do it. And so it just never works. You're never able to hold through a trade plan unless it's yours. I think trading communities are fantastic as a way to do like a human scanner. Hey, I'm a human scanner, and that's like I'm getting these ideas. So what I mean by that is when you have a trader that's got tons of experience, for example, right? You got a trader that's got tons of experience. His ability to look at lots of stocks is going to be way bigger than yours. So you can make tons of money watching 2 or 3 or 4 stocks. But a trader with experience, man, they might be able to watch 20 stocks, 30 stocks, 50 stocks, whatever it might be. I can't do that. I can watch maybe 15 to 20. Nate, for example, man, he can have like 5 swing trades, 6 day trades, 3 shorts in this and that. His ability to compute information is so huge. And so like you want to use that as like a human scanner. Like he can watch more stocks than anybody else, right? I can watch more stocks than anybody else. So like even when I'm trading, like, I'm alerting things like what I'm buying and selling, but I'm always letting them know too, like, hey, this thing is, hitting an alert, this thing is breaking out. I may not be in these because I only have so much bandwidth to trade so many stocks. All right, I'm always letting them know, like, hey, this thing is breaking previous day's high. This thing is breaking previous day's low. Hey, this stock just hit the news scanner. It's got, a filing out. Hey, this guy's got a dilution out. I may not act on it, but I'm always calling those things out because I can watch a lot of things. And I think that's the real advantages of having a community is, number one, the education part, which that should be the first and most important thing is the education part. And then the second part is that ability to monitor so many things that you would never be able to do on your own, right? That human scanner component of it. But the big thing is like, in the end, it still always should be education focused, because you just can't make money blindly. You might be able to do it for a few months here or there. But when the markets turn, when the markets get rowdy, how can you really be able to? I had 560 executions today, right? Like, all right, I traded till noon. Like, how is anybody supposed to follow that?
If you're looking for a trading education or to take your trading to the next level, Investors Underground might offer what you need to meet your trading goals. You'll have access to courses and mentors to learn from, some of the best technology available for scanning stocks and breaking news, and access to the chat rooms where you'll find a vibrant community of focused, like-minded traders sharing their trading ideas and talking through them every single day. You'll also have access to the midweek study session, webinars, Nate's morning call, and all the other tools and resources that Investors Underground has to offer. Listeners of the podcast can access special deals at investorsunderground.com/YouTube. And now, back to our interview with Kunal. One of the topics I wanted to touch on as well, Kunal, was about lifestyle and mindset optimization. How important is it for traders to really optimize their lifestyle and the way that they think and operate around trading in order to find success?
So there's 2 aspects of this that I think are really, really important. Number one, with all this self-help stuff and all this like amazing stuff that's been out there by really successful entrepreneurs and traders, of different routines and all these things that happen. There's like so much wealth out there. But one of the things that we have to really be aware of is, look, when people are sitting there and like, hey, you got to sleep 10 hours, you got to sleep 8 hours, you got to eat grass-fed beef. You got to take these ice baths and all this stuff. These people are coming at you as millionaires, but there's none of them were doing these things before they were millionaires. So what happens is as you get older and you make money, you're thinking about how to live longer, how to be more stress-free, so on and so forth. And I do these same things, right? Like I'm all this kind of stuff I'm also doing. But when you're in your 20s and you're trying to make your nut, you don't got time for this shit. Like you really don't. Like you cannot hide from the work. Like the sleepless nights, the sleeping under the table, the late night pizzas, the cigarettes, the booze, the women's, whatever. Like these are just parts of being younger and living, but you can't run away from the work. So all of this stuff is awesome. But like, I really think we're doing a disservice sometimes to new traders, young traders. Like, you just sit there and sleep really 8 hours. You just sit there and do ice baths all day. Guess what, guys? Ice baths shrivel your balls. That's all they're going to do. It's great. But the people that tell you to do it are already rich. If you're 40 years old and you got $10 million in the bank, of course you're going to sleep 8 hours. You probably sleep all damn day, right? But that's not always the case. When I was new and trying to make a damn dollar, no sleep. When Nate was new to try to sleep a damn dollar, no sleep. When Modern Rock or any of these people, Phil Godeker, like they weren't doing ice baths and sleeping 8 hours at the age of 25. So the work is the work. Like you got to do it. Because if you're not obsessed about this, if you're not sitting there and doing the nitty gritty, the granular details, if you're not torturing yourself, man, it's tough sometimes. Like you can only woosah your way to so much. And I've often found like when I'm woosah, I lose a lot of my edge anyways. Like, man, you know what happens when you're really relaxed? You don't feel like going for glory, that's for sure. Like you don't. And you're like, I mean, my $2,000, I'm pretty happy with this woosah, right? It's only sometimes when you're on the edge, you're working at night and you're going for something you didn't think was possible. And you're really in that grind of it, that nitty gritty of it. Like you're making your millionaire's run. I call this the millionaire's run. When you're just putting every ounce of what you have in it. And yes, it will probably destroy your body in a certain way, a little bit of your mentality. You hear a lot of traders from Short Bear or any of these guys, you hear about them like myself, like when you make that millionaire's run, like, dude, your body is destroyed. You haven't slept. You ate like shit, but you still made the damn money. You still made the money because the work is the work. And so for me now, that's totally different. You know, I moved to Destin. So when I was 30, I bought a beach house in Destin, beach townhouse. And I did that because I had made my millionaire's run and where I just put it all on the line and I tortured myself. And then I said, man, I got to get out of here. Like I got to get some sun. I got to change my lifestyle a little bit, right? And that did allow me to be a better trader, more calm trader, manage my risk better, and all these kind of things. And so I'm a big believer in the lifestyle and the hacks that go with it. But I cannot name one person that had all those hacks before they made their money. And so the work is always the work. So now, yeah, like I live on the beach. Like, I don't know if this is like the best place in the history of the world for me to survive, but for my trading, it's incredible. Like I go for a swim up today in the ocean. I bring out my snorkel gear. You can see sea turtles and fish and little random sharks and all this kind of stuff. And it's like so relaxing, right? And so like that's important. I've traveled, I don't even know, 50 countries, 60 countries in the last 10 years. Like I traveled everywhere and done all this stuff. And I think that's really helped my trading too. Like I love trading on the road because it makes me so focused. And these type of things, they do help. But in the beginning, sitting in your room with the drapes down and a box of pizza and some Folgers coffee and just doing it. Like there's something to be said about that. And every successful entrepreneur I've known that's not in trading and the ones I know in trading, they've all gone through that process. So yes, dude, make some money. You live your best life. Get to the beach, get to the mountains, whatever you're interested in. It's going to extend your life and make your trading better. But if you're trading with like $2,000 and you're like, I got to move to the beach so I can be a better trader, that's not really how it's going to work. Like you got to get in and you got to roll up your sleeves and get dirty.
Is there any advice that you would give to traders who might find themselves otherwise getting lost in sort of tunnel vision for 5-10 years at a time? And would you give any words of advice to traders in terms of understanding why they're trading and hoping to make their millionaires run?
So first of all, if you're spending 5-10 years trying to learn how to trade in today's day, then you're doing yourself a huge disservice. You have to figure out, number one, are you into trading because you love it? Okay, then 5-10 years is not a big deal. If you're into trading because you think it's going to make you money and you've been doing it 5-10 years and you haven't made any money, you should not do it. Become a dentist, become a mortgage broker. I live here in Florida. Florida is like the biggest place in the history of the world of grifters and rednecks with a lot of money. And you know what? There's a lot of things you can do to make a lot of money. And that's a lot easier than trading. So if you just want to make money and you're sitting there like trying to do this for 5-10 years, you're doing yourself a huge disservice. Quit. There's so much stuff out there, man. Make TikTok videos, get an OnlyFans. I don't know, but do something else. There's so many ways to make money in America right now. We're the greatest spot in the history of the world to make money and not know that much. Now, if trading is in your soul, like you love it, okay, then what's 5-10 years in the scheme of your life? That's a whole different ballgame. So if you're so tunneled in, then you've got to do a couple things. First, expand your circle a little bit, right? Expand your circle a little bit to some other traders. Maybe they're a similar age of you, similar style of you, whatever it might be, but just like people that you can talk to. That's where the trading communities really come in that I think are really helpful. It's a lonely game. It's depressing. I can't even count how many tubs of ice cream and Rachel McAdams movies and heavy masturbations I've done in my room after a bad day of trading. Like it's lonely. And so that trading community really, really helps. Find a group of traders. I've got some. I have trader friends I talk to every single day that I've known since 2008. I sit with them on Gmail, text message, whatever. Like we chat with each other. We hold each other up. We share ideas. But the big thing is, right, it's just that it keeps you going. Should be at this for a long time. Dude, get out of your circle, right? Get out of your circle, your friends, your family. So I came from the Midwest. It was really easy to just grow up around people you know, the town that you know, and you don't know anything else. And everybody's doing one thing and you're doing something completely different. So you got to expand your circle. Beyond that, change your locations. Change what you're doing. Get out there. Go to Romania, Costa Rica, Colombia. Go somewhere where it's super cheap. Just change what you're doing, right? Sometimes that can expand your mind. If you've been stuck in a rut, you expand your mind, expand your location, make some friends, but you got to live life. One thing I always did, even when I was grinding my balls off, man, I always had fun. I always had fun. I know everybody's down right now and drinking and this thing and that thing, but man, when you're having fun, you got to be a good trader because it just empowers you and motivates you to go out and make more money. Like if I'm not having fun, I'm not making good trades. So I love traveling and trading. I bring my parents. I got 3 sisters. The guys that work for me, last year, we all went to Italy for 2 months. I made more money doing that because I'm stepping out of my location. I'm experiencing some new things. I'm having some fun with my friends, my family. Those things help. And if you're not even in that realm where you can't do those things, of course, man, take a little road trip. Go to Yellowstone, Yosemite, right? Go and do stuff and trade out of your laptop. Even if you don't have all your tools, it's going to help you a long way. But in reality, if you're still struggling for long periods of time in today's day, narrow it down. Ask yourself, do I have checklists and systems and processes for the 4 stages of the market for every setup that I do. Do I got a legitimate business plan for this? Okay, I trade gappers. What does that mean? What's a good one? What's a bad one? How do I enter them? How do I exit them? How do I manage my risk? How do I know when to go bigger size, little size? Okay, what's the next setup? What's the next setup? If you do not have a recipe, like you're baking a cake, for every single setup that you do, then you could flounder around for 5, 10, 15, 20, 30 years. You never will make it. You got to have a recipe for every single thing that you're doing. And then you have to have contingencies for every single market that you're doing them in. If you don't have that, then you're probably not going to make it anyways. Like you can change your location, you can make trading friends, and you can freeze your balls in ice baths and all this kind of stuff. But you have to have specific processes for those things. That's ground one. That gets your foot in the door. Everything else is just addendums, right? Lifestyle things, sleep things. These are all just addendums beyond, do I have a rock solid strategy that works in all 4 market cycles? And by the way, like, right now we've been in a trend for 6 months. Since I've been trading, markets trend for 2-3 months up, then they trend 2-3 months down. Then a lot of markets, a lot of years, they just chop the rest of the year. Do you have a strategy for chop? Do you know how to identify it? Do you know what to do with it? So in chop, mean reversion works really well, right? In trending markets, trending strategies work really well. Do you have a mean reversion strategy? Do you have a trend strategy to the up and down? These are the things that really, really matter. So build out your business plan, your playbook of these markets. Then if you're struggling, start moving on. Get some help. Join a trading community. Make some more friends. Do all those things and expand those things because there's something in there. But one last thing on this is I'll tell you this from just grading literally thousands of students of trades over the last 15 years. What I have seen is even the shittiest traders, I'm talking about the ones that you would look at them and be like, man, you see their overall results, their net P&L, and be like, oh, man, this guy's not going to make it. Even in those traders, what I have noticed is there are 1 or 2 things that all traders are actually pretty good at if you've been at it long enough. I'm talking about people that have been at it a year or 2 or whatever or more. They'll have one thing. So you get a net P&L, I lost $100,000 this year, $50,000, $20,000, whatever it is. And you have just losses. One thing I've noticed, and that's why the Trader View, Trader Sync type of journals are really helpful. Even those guys or gals, they have 1 or 2 things that they're actually good at. So identifying them. Okay, I've identified them. I trade these 2 things really well. It may be 2 types of setups, or it could just be 2 types of setups that work in a certain market condition. Okay, we've identified them. Let's do more of that. Why not? Let's cut out all this other junk. Why do you got to be good at everything, right? Let's cut out all that junk. Let's focus in on it. Okay, how do I focus in on it? Okay, do you have any filters or scans to find this particular setup? Well, no, I didn't even know I was good at it. Well, now you know, right? So let's develop something where you can find this. More of it. If you have a setup and it's a setup that's working, there could be dozens of opportunities every day in it. You don't know, right? Till you build out a filter that finds all of those things. So let's quantify this. Let's qualify this. Let's build out a scan that identifies them all. And let's do more of that till you're losing stops. We can add in this other stuff later with profits. You can take more risks. You can take more liberties when you're a profitable trader. But let's just focus on this till you get profitable. Let's do this 1 or 2 things for 6 months and build up your bankroll. Once your bankroll is built, okay, we can add in a couple of other things. And guess what? You'll have more confidence and competence to try some new things, and you'll probably be better at them anyways, because now you got profits under your belt, hooking you up, right? So narrow those things down. That will work. The shittiest traders always got even 1 thing they're good at. They got 1 thing. If you go through all their trades, 1 thing they're making money at, identify it, build filters of it, and just do that. Just do that for a period of month till your slump breaks and you have an account size where you're like, hey, I can take some more risks. I can do a little bit more of that.
Thank you so much, Kunal. Those are Excellent ideas and all things that traders should really take a moment to think about and consider. If it's okay with you, Kunal, I'd love to go through a lightning round set of questions, just quick questions, kind of quick answers, if that's okay.
Let's do this.
What would you say is your greatest strength as a trader?
My greatest strength as a trader is my memory. It's given me a leg up on almost everything that I do. I remember scenarios and setups from months ago sometimes. And I remember specific sequences, like when stock gapped up and failed. And then, you see news on it again. And I'll remember, like, this one always gaps up and fails. Having that memory has gone a long way. Now, I accentuate my memory a lot by going through my journals a lot. So I'm also reinforcing like a lot of the things that I've seen. But my natural memory is really, it's taken me a long way.
What would you say is the greatest piece of trading advice you've ever received or heard?
Greatest piece of trading advice I ever got was from Daniel Mardoff. He's John Welsh Trades on Twitter. I think he just changed his name to John Welsh Slays. But one thing he told me in 2011, after I started making my first money, he said, pay off your house, pay off all your stuff. And he told me, buy yourself a damn. I was like, dude, what do I do with this money? He goes, buy yourself a damn car wash. And I was like, what? He's like, take your money. We're day traders, right? You're not going to be a billionaire day trader. He's like, take your money, put in a car wash, put in a motel, put in something that's making you money, because we're day traders. We're here for the kill of that day. You're not going to make $5 million in a day or $20 million in a day. Like, this is an income thing. You might make hundreds of thousands of dollars in a day, but this is day trading. It's only scalable to a certain level. But one thing he said was, look, when you got money coming in, you trade a lot more free. So he's like, he told me buy some car washes. That was his thing. He's like, dude, buy a couple car washes, 200 grand each. He's like, I'll make you XYZ money. This is, way back in the day, 2011, when things were a lot cheaper. But man, that really stuck with me because it was so true. Like, taking that money in the beginning and sitting it in other spots and just having cash flow coming in, man, that makes your trading, it allows you to do so much more. It allows you to take extra risks. It allows you to maybe hold overnight. It allows you to have a book of positions. It allows you to really expand your playbook and when you have money coming in. And, in the end, it was just like, you either do that or spend it on, cars or whatever. Anyways, he's like, do it all. Buy your cars, buy your watches, whatever you want, but just buy a little bit of it and then put the money into these income producing kind of things. He gave me like 3 or 4 ideas. And that that was the best trading advice I ever got. Because so many people, they trade, they make money, and they leave it in their damn trading accounts. And then what happens is when the market turns, it's not your money till it's out of the trading account, till the taxes have been paid, till it's in something else, And so in 2022, so many of my friends or people I ran into, like, they lost all that money. Look, the money shouldn't even been in the account. You made the money. Take it out. Leave a couple hundred grand in there, or $500,000, or whatever you want to, that you think you need to trade with to hit your daily goals. Take the rest out.
Do you tend to use mental stops or hard stops?
Great question. So I will use mental stops at the open because it's just too much to be sitting there canceling orders, raising stops, so on and so forth. After the first 30 minutes, if I'm in multiple positions, so 3 or more positions, I will put hard stops in them because it's just hard to manage more than 3. If I'm just in 1 or 2, I'll just use mental stop because I can sit there and I have the bandwidth to do it. But if I'm carrying a book of positions, then I got to use the hard stops because you just can't manage like 5 or, if the market's super hot, near like 5, 6, 7 things, you got overnighters, you got day trades, you got all these kind of things, then you need them because you're just not going to have the bandwidth to manage the risk, but you're also leaving yourself open. It just takes like one tweet, one piece of news, one thing to make them all dump at once. And then how are you going to get out of all of it at once, right? So more than 2, hard stops. Under 2, mental stops.
Is there anything that you do away from the trading desk that helps you believe, when you get back to trading?
I love trading, but I am not one of those guys that sit there in the pre-market, the post-market, sitting at my desk all day. Like I live on the beach. I love going to the beach. I'm on my boat a few times a week. Like I lift weights every single day. Like I'm always like I play basketball. Like I have a big social life of just being owning Bulls on Wall Street. Like I have 15, 20 students just on the street here that that are traders, that are friends of mine too. We all get together with talk shop, but play volleyball or whatever. I'm always trying to do something, but I love traveling too. Like I've been all over the place traveling and trading and teaching. But yeah, I'm a big believer in keeping at some point a busy life. You can't have it all in trading. But in the beginning, you better be all about the trading.
And what has been your most memorable moment of your trading career so far?
Yeah, I would say the most memorable moment of my trading career, I have a couple that really stick with me. But I would say one of the most memorable moments of my trading career, I had a live event in Dallas a couple of years ago where we had maybe 20, 30 students come in. It was like a week-long seminar. I'm a big believer in doing things live. I never do anything recorded. I don't believe in on-demand, all this kind of nonsense. I do everything live. And so we had a week-long, a 7-day long, basically just soiree. And seeing like so many of my students like come in, like people that have invited me to their weddings, like people have like when they have their babies, they like call me, from the hospital. But that Dallas event, like seeing some of all my old students and seeing, man, not just like, the adulation, but like just knowing that, like, man, you got friends for life here. Like, you've taught what you do to other people. Like, and you're really in this, right? You're really in this. I carry a photo on my wall of my bedroom of that moment, like, just knowing, like, man, like I actually did something in my circle. It's not substantial. Like, I'm not Elon Musk or Mark Zuckerberg or Donald Trump or anything, but on my own small circle of 50 or 100 or 200 or whatever it might be, I got something done. I've done something pretty cool, and we've always done that. And so, even from that conference on, like we have one get together, everybody stays at my place. Every single summer, we do summer boot camp over here. And just knowing, like, man, I built a business where people have been with me for now 10 years plus. And, I can't even count how many weddings I've been to with my students and stuff like that. Like, that's when you're making it. And that's the one thing you get out of teaching people, face to face, live, and meeting them. And I teach class every single night the same way. That goes a long way, I think, to just that self-satisfaction of, once you get all your toys out of the way, that's your young man's thing. Like, this next phase is always like, hey, did I do something good? Have I made some kind of impact? It doesn't have to be a huge impact, but something in my circle. And I think that's gone a long way. I love seeing my guys. And that Dallas event really, it took it home for me. Just now I'm like, man, these are my people.
And for anybody listening who would love to learn more about you, your way of trading, or maybe even contact you, how can they do so?
I'm Kunal00 on Twitter and Instagram. You can always find me at Bulls on Wall Street. I'm always the guy with the Bull t-shirt.
Kunal, we got to talk about all sorts of stuff today. All of it has been really helpful and a ton of fun. So thank you so much for taking the time to chat with me today.
My man.
We hope you enjoyed this interview on the Investors Underground podcast. We have more great interviews that we believe you might also like. So don't forget to subscribe. You'll be notified of upcoming releases the moment they become available. Thanks for watching.